Hello and welcome to my channel Knowledge Hub. This is your virtual commerce classroom and today I am going to discuss a chapter on journal entry. So without further ado, let us begin. Before I begin, we need to understand what is a transaction. Let us take an example. Suppose I run an XYZ restaurant. Every day I am purchasing raw materials in lieu of money and I am selling fast food to my customers who are paying me in return. All these exchanges are called transactions and are of financial nature because money is involved. Now, all these transactions are equally supported by documents such as cash memo, bill, invoice, etc. All these documents are called the source documents. And with the help of these source documents, the transactions are recorded. A book where such transactions are recorded for the first time is called the journal. It is one of the basic books of original entry. When a business continues for a long period of time, there are various transactions taking place. Now, recording each and every transaction in a journal becomes very hectic. For this purpose, a journal is also subdivided into sub-journals or the subsidiary books. Some of the subsidiary books are the cash book, purchase return book, sales return book, bills payable, bills receivable, etc., where the transactions are separately recorded. So now I am going to move into the traditional approach of accounting. We have previously learned the modern approach of accounting where the accounts were classified into 5 types. But in traditional accounting approach, the accounts are classified into 3 types: real account, personal account, and nominal account. Real accounts refers to those things or the accounts of those which can be measured in terms of money. Let me give an examples of real account. Furniture, building, goodwill, patent, all this falls into the category of real accounts because all these things can be measured in terms of money. Now, in case of such accounts, what do we debit and what do we credit? In such accounts, what comes in is debited and what goes out is credited in case of real accounts. The next is the personal account. As the name suggests, personal account, it refers to the accounts of persons or individuals. In such cases, the receiver is debited and the giver is credited. Receiving and giving everything is in terms of money. The next is the nominal account. This account includes all the expenses and losses and the incomes and gains. Here, the expense and losses will be debited and the incomes and gains are credited. Now, before I begin with a journal entry, it is important to understand what is a double entry system. We all know what is a transaction. Every transaction affects at least 2 accounts. Whenever something will be debited, an equal amount is credited. There is no debit without credit and there is no credit without debit. This too goes along. Now, let us try to understand this double entry system with the help of an example. Paid rupees 600 to X. So the 2 accounts involved is rupees 600 and X. One is the cash and one is X. So every transaction will affect at least 2 accounts. Now let us determine the nature of these accounts. Cash will be an asset account because it is the property of the business and it will help the business to derive any future benefits from it. The second one, X, is a personal account. It represents a person, so it's a personal account. And being an asset, according to the traditional approach, it is a real account. And X, being a person, is a personal account. Now, as I've already said, in the traditional approach, for real accounts, we debit what comes in and we credit what goes out. So from the transaction, we can already see that rupees 600, that's the real account, or rupees 600 cash being a real account, is going out. So when it goes out, we are going to credit it. And Mixter X, being a personal account, in the traditional approach, we know that we debit the receiver and we credit the giver. Here, from the transaction itself, it's clear that Mr. X is the receiver. So, we will debit Mr. X. So, you see, in the double entry system of accounting, whenever we debit something, we equally credit something. It always affects at least two accounts. So, the next example is furniture purchased for rupees 16,000. What are the two accounts involved in this? Are one is the furniture and the other is the amount of money. Both furniture is an asset, that's a real account, it can be measured in terms of money, and cash is also a real account. So, in a real account, according to the traditional approach, we know that what comes in is debit and what goes out is credit. By reading the transaction, it's clear that furniture purchase. So what is coming in is furniture. So the furniture will definitely be debited, and the cash, being a real account as well, is going out. Whatever goes out is credited according to the traditional approach. So rupees 16,000, that is the cash, will be credited. Now let us take another example. Paid salary rupees 5,000. So from the transaction, we can identify the accounts that it is affecting. One is the salary and the other is the amount of money. So these are the two accounts. Salary is an expense, so it becomes your nominal account. And cash is a real account. According to the traditional approach, any expense or loss will be debited. Here, salary being an expense will be debited, and cash, being a real account, is going out of the business. So, it will be credited. So, from all these transactions, it is clearly evident that each transaction at least affects two accounts. One will be debited and the other is credited. Now, as we have understood the basic concepts of the theories behind the journal entries, let us move into the practical problems. Before that, we need to understand, or we need to know the format of a journal entry. So now I'm going to discuss the format of a journal entry with you. So this is the format of a journal, or the layout in which we are going to solve our problems. The first column is the date, next comes particulars, then is the LF, that's the ledger folio, amount rupees in debit and amount rupees for credit. In the date, we are going to mention the date of the transactions that will be given in our question. The next comes the particulars. As we already know, each transaction affects at least two accounts. Here, we are going to mention the names of those accounts which the transactions are affecting. Along with it, we are going to put a narration below each transaction or each account. The next comes the ledger folio. For now, it will be kept blank. But the ledger folio mentions the page numbers in which the particular journal has been posted in the ledger. The next column is the amounts for debit. We have already understood in the double entry system that for every debit, there is a credit. So whenever there will be a debit, there will be a credit as well. And the amounts in the debit and the credit will always be equal. So this was all about the format. Now let us begin with the problems.
Question reads as journalize the following. For the solution, first we need to write up the format. The heading is journal entry. Left hand side extreme column is date. Next is particulars, LF, amount for debit and amount for credit. Now let us read the following first transaction. The first transaction reads as X started business with cash for rupees 50,000. Now, we already know each and every transaction affects at least two accounts. So, the two accounts that is being affected in this transaction is cash and the capital. Cash is being introduced by the proprietor. So, the cash and the proprietor's capital account gets affected. Cash, its nature being a real account, and according to the traditional approach, we know any real account, for a real account, what comes in should be debited. So, cash being introduced into the business or brought in, or what comes into the business should be debited. So, cash account is debited. And the capital account, which is being affected, is a personal account. And for personal account, the rule is the giver is credited. So, here I have credited my capital account. For every credit, we write 2 in the beginning. So, my transaction is cash account debit to capital account for an amount of 50,000 and 50,000. The amount for debit and credit is always equal. Now, at the end of the transaction, we need to put a narration. Narration is something that is very similar to the transaction given in the question. It starts with the word being. The transaction given was X started business with cash, so the narration became being business started with cash. Now let us move on to the next transaction. Purchased furniture for cash rupees 12,000. The two accounts that are being affected are cash and furniture. Both are real accounts. So for real accounts, what comes in is debited. Purchasing furniture brings in furniture into the business. So furniture comes in, so furniture account is debit, and I'm paying out cash. So cash is going out. So I've written to cash account. That means it is cash account is being credited. Amount is 12,000, 12,000. The narration is being furniture purchased for cash. Let us move into the next transaction. Purchased goods from Ashish for rupees 14,000. The two accounts that are being affected are goods and Ashish. Goods being a real account must be debited. And since it's not mentioned, I have purchased my goods in cash, the account being affected instead of cash will be Ashish. That means the transaction states it is a credit purchase from Ashish. So my transaction will affect Ashish account. Now, here's one thing to note. For goods, any purchase or sale of goods, that means what the business is purchasing for resale, we are going to use the term purchase and sales and not its particular name. So now let us look into the solution. See, I have debited the purchase account. Being goods brought in, that is, real account when comes in is debited, so I have debited my purchases, and Ashish account will be credited. Since I have purchased the goods from Ashish and not paid him, he becomes my creditor. So, to Ashish account 14,000. Let us move into the next transaction. Paid cash to Ashish. The two accounts that are involved includes cash and Ashish. Cash being a real account here is going out. So for cash, I'm going to credit it. And Ashish is the personal account who is receiving. So I will debit Ashish's account. So Ashish account debit to cash account for an amount of 14,000. And the narration goes being cash paid to Ashish. The next transaction is paid rent 1,000. The accounts involved are rent and cash. Rent being an expense will be debited. So rent account debit and cash is going out. So to cash account, that is 1,000 rupees. The next transaction, salary is due to employees for rupees 50,000. Now salaries are an expense, so that needs to be debited. But here In the transaction, it is said it's due. So my cash is not going out. Instead, I'll credit my outstanding salaries account. Outstanding salaries is a liability for me. So my liability also increases. When my liability has increased, I have credited my outstanding salaries account. So my transaction now is salaries account debit to outstanding salaries account 50,000, 50,000. Let us look into the next transaction. Payment of insurance related to the next year for rupees 10,000. From the transaction itself, it's evident that the insurance premium which is being paid is in advance. It's not related to the same year. So any prepaid expenses or advance payments is an asset to the business. And once our asset increases, we tend to debit it. So my transaction becomes prepaid insurance account debit to insurance premium account for an amount of rupees 10,000. Let's move on to the next transaction. Purchased table fan for domestic use 2,200. Now, from the transaction, see there's a word domestic use. Domestic use is for the personal use of the proprietor and not for the business. Whatever we take into account for the journal entry, we are doing the accounting for the business and not for the proprietor's personal account. So, this is a kind of a drawing of the proprietor which he is using. He is taking out the money from the business to purchase a fan which he will be using at his home and not in his office. It's for the purpose of a domestic use. So this will be treated as a drawing. So my journal entry is drawings account debit to cash account for an amount of 2,200 rupees for both debit and credit. The narration is being cash withdrawn for personal use. Let's move on to the next transaction. Depreciation on furniture at the rate of rupees 1200. So depreciation basically means the reduction in the value of an asset. So depreciation is an expense and furniture is my asset and it's a part of the real account. Depreciation being an expense is debited and the value of the asset is reduced, so it will be credited. My journal entry stands at depreciation account debit to furniture account for an amount of 1200, 1200. Narration is being depreciation charged on furniture. Let's move on to the next transaction. Interest on capital for rupees 5,000. Now, the interest on capital is to be provided by the business to its proprietor. This is an expense on the part of the business. So, any expense should be debited. So, interest on capital account debit to capital account. This increases the liability of the business. So, the capital account is credited for an amount of 5,000. Being interest on capital paid. Let's move on to the next transaction. Interest on drawings for rupees 220. Now, drawings is an expense. So, being an expense, the drawings is debited and the interest on drawings is an earnings for the business. When a proprietor is drawing the money for himself, he is liable to pay the business some interest on it. So that becomes an income on the point of view of the business. Being an income, it is credited. So my journal entry is drawings account debit to interest on drawings account for 220 rupees. Narration is being interest on drawings charged. Next transaction reads as income tax paid by check for rupees 8,000. Now, the income tax is paid by the proprietor because he is earning the profits from the business. It's a source of income for the proprietor. He is supposed to pay the tax and not the business. So, income tax is considered to be a drawing. So, again, my journal entry stands at drawings account debit. Being an expense, it is debited. Now, it is mentioned it is paid in check. Since check word is mentioned, we will credit the bank account. My bank balance is reducing and not my cash, because in the transaction it's clearly mentioned that the income tax is paid in check. So my journal entry stands at drawings account debit to bank account for an amount of rupees 8,000. Narration is being income tax paid by check. Please note that in case of journal entries, after each and every entry, you need to pass a narration. So let's now move into another problem. My question reads, the following balances appeared in the books of Vishal Stores on 1st April 2015. First, in the solution, we are going to prepare the format with date, particulars, LF, amount for debit and amount for credit. Now, whenever a problem starts with the opening balances, we are going to debit all the assets and we are going to credit all the liabilities. See, in our first journal entry, I have done that. All the balances for the assets with their names, I have debited them, and whatever was in the liabilities, I have credited them. Now, as I have already mentioned, that the debit side and the credit side, that is the total for debit and the total for credit, should always be equal. But adding up these balances, it was showing that the debit balance was higher than the credit ones. So the remaining balance, that is of 65,100, I have put into the capital account written as balancing figure. The narration is being assets and liabilities brought forward. Let us move into the next transaction now. My transaction reads on April 2, bought goods from Kailash for 20,000 at a trade discount of 10% and a cash discount of 20%. Paid 60% amount immediately. So, before we get into our journal entry, we need to understand the workings. Remember one thing, for goods, anything related to goods, that is a purchase and sales, we use the term purchase and sales itself. So now, let's move into the workings. The question reads, the goods have been bought at a trade discount of 10%. So the total amount of goods purchased was for 20,000. Now we need to deduct the 10% discount amount, that is a trade discount, which we receive at the time of the purchase itself. So 10%, deducting a 10% amount from 20,000 is an amount of rupees 2,000. After deduction, the balance stands at 18,000. Now what is said next is, again we have received a cash discount of 2%. Paid 60% amount immediately. Paid 60% amount immediately means I have made 60% of the purchase which has been done is cash purchase, and the remaining 40% is therefore the credit purchase. Now, when I'm receiving a cash discount, definitely I'm going to receive it for the cash purchase and not the credit ones. So first, we need to calculate what is the amount of our cash purchase. The amount of our cash purchase is 60% of the total amount after the trade discount. So this is what I have done. 60% on 18,000 is an amount of rupees 10,800. Now we are ready to deduct an amount of 2%, that is the cash discount, from my cash purchases. I have deducted cash discount 2% of 10,800, which was my total amount of cash purchase. The amount stands at 216. Now my balance stands at 10,800 minus 216 rupees. My total amount now stands at 10,584. Now, this is the total amount I have paid. This is the calculation for 60% of my cash purchase. Now rest, again the 40%, that is my credit purchase. So what is my credit purchase amount? My credit purchase will be the total after my trade discount minus my cash purchase. So it stands at 7,200. Now let us have a look into our journal entry. Since I have made a purchase of goods, so I'm going to debit my purchase account. But the amount will be 18,000 and not 20,000 because on purchase I have received an instant trade discount of 10%. So I will not record this amount. I will record the amount which I have paid. That is an amount of 18,000 after receiving the discount. So I have debited my purchase account with 18,000. Next, 60% amount has been paid in cash. So to cash 10,584. This is the amount which I have paid in cash after finding out my cash purchase and deducting my cash discount out of it. This was the total amount I had paid. So to cash 10,584. I have received a discount, so this is an income for the business. Any income must be credited. So I have credited to discount received account. What was the cash discount I had received? The cash discount was 216 rupees. So this is an income for the business. So being an income, it's credited at an amount of 216. And now, since the entire purchase was not a cash purchase, there was certain amount of credit purchase involved. So I need to include my creditor as well. So whenever my creditors increases, we credit it. So I have credited to Kailash account an amount of rupees 7,200, which was my credit purchase amount. Now if you check, your debit balance and the total of the credit balance stands at equal. Now, let us move into the next transaction, which reads received 4,800 from X in full settlement of his account. So, the first part from reading it, we understand that we have received an amount of rupees 14,800 in cash. So, cash being an asset, when it comes in, it must be debited. So, I need to debit my cash account with 14,800. Now, the next part mentions the fact that I have received 14,800 in full settlement of X's account. So let us first determine what was exactly due from him. If we look, the first transaction, X showed a debit balance of rupees 6,000. Later, we again sold him goods worth rupees 9,000. So X was showing a balance of total of rupees 6,000 plus 9,000, that is 15,000. So since it's mentioned we have received in full settlement, so all the debit balance will add it up and we will credit X's account. So that settles his account. Once debit, and again when we credit the same account, it cancels their effect or it settles the account. So I have settled my X's account with rupees 15,000. But I have only received 14,800, whereas I was supposed to receive 15,000. So there's a difference of rupees 200 which I did not receive. So that is already an expense for the business. That is a loss for the business. So being a loss, it's mentioned in the debit side, and being a loss, it's debited in the name of discount allowed account. So my final journal entry stands at on 5th April. On 5th April, my final journal entry stands at cash account debit, discount allowed account debit to X's account. The narration is being cash receipt and discount allowed. Let us now move into the next transaction. The next transaction on April 6th reads as check received from Y for 7,850 in full settlement of his account. This check was immediately deposited into the bank. So this time it's clearly mentioned that I have received a check from Y for an amount of rupees 7,850. Being a check, it will increase my bank balance. So what comes in must be debited being a real account. So I have debited my bank account with an amount of rupees 7,850. Since the words full settlement is again mentioned, we need to check what was the balance of Y account showing. Y was in the first transaction, Y was standing at a debit balance of rupees 8,000 and there was further no transactions with him. So, in order to settle his account, since it was showing a debit balance, we need to credit him. So, here I have credited to Y's account for an amount of rupees 8,000. Now, again, there's a difference in the amounts. I have received 7,850 instead of 8,000. So, there's a loss which the business is bearing. So, any loss must be debited. So, again, 150 rupees of loss shows in my debit balance and mentioned as discount allowed account. So, my new journal entry stands on April 6 stands at bank account debit for 7,850, discount allowed account debit for 150, and to Wise account for an amount of rupees 8,000, which was in full settlement of his account. In the next transactions, I have not mentioned the narration, but remember, for every journal entry, you need to pass a narration as well. So now, let us move into the next transaction. On April 8th, it's mentioned received a check from Z for rupees 2000. So, this transaction affects two accounts. One is the bank, another is the Z. Since check is mentioned, we will use bank instead of cash account. So my journal entry would have been bank account debit to Z. But on a later date, it's mentioned check received from Z deposited into the bank. So this particular transaction is divided in 2 days. First, I have only received the check. On the next day, I have deposited my check into the bank. So now let's look into the journal entry. Being check received from Z on April 8th, I have debited my checks in hand account because a check is coming in. Being a real account, what comes in is debited. And I have credited Z account. He is the giver. So I have credited Z account with rupees 2000. On a later date, on April 9th, what is said is I have deposited my check into the bank. So now actually this transaction takes place where I will debit my bank account. My bank balance will increase when I debit my check, when I place my check with the bank. So when my bank account increases, I will debit my bank balance with rupees 2000 and the check is now moving out of the business. So once when it was debited, it is now credited to checks in hand account for rupees 2000. Now if we carefully look into this transaction, we already know when an account is debited and the same account is credited, it settles the account. So my entry actually stands at bank account debit to Z account, which should have been the entry in the first place if the transaction wouldn't have been divided into two parts. That's on April 8th and April 9th. Now let us move into the next transaction. April 10th, check received from Y is dishonored. So now previously we have already made an entry where we had received the check and we had received a check from Y in full settlement of his account and we had allowed him a discount of rupees 150. Now once he dishonors his words, what happens is we will not further allow him any discount and rather we will again debit him. Previously he was credited, now he failed to keep his words. So now again we are going to debit Y's account. So this is an exact opposite entry of the April 6th. Again we have debited Y's account, to bank account and to discount allowed account with the same amount. Since Y has failed to keep his words, his check was dishonored, we are even not going to allow him any discount. So now let us look into the next transaction. April 12th. Z became insolvent and 40 paisa in rupee could be received from his estate by check, which is deposited into the bank. So for this transaction, let us first check out what amount or the total amount which we're supposed to receive from Z. Because in the transaction, only a percentage of amount which was supposed to be received is mentioned. But the exact amount is not mentioned. So we need to calculate it. If we carefully look into the previous transactions, we'll be able to find out that Z had been debited previously in the opening balance was for rupees 10,000. Again, we received on April 8th a check of rupees 8,000 which was deposited into the bank on 9,000. So once Z was debited for an amount of rupees 10,000 and later Z was credited for an amount of rupees 2,000. So his net balance becomes 10,000 minus 2,000, that is 8,000 rupees. Now what is mentioned as a question is that this 8,000 rupees was not received exactly. What it mentions is only 40 paise in a rupee is received. That means only 40% of this amount is received from him in check. So we are going to debit bank account because we are receiving a check. Being a real account, what comes in, it must be debited. But the amount is only 40% of the 8,000 rupees which we were supposed to receive. So 40% of 8,000 becomes 3,200. So we are debiting bank account with 3,200 rupees. And we will settle Z's account now because nothing else can be received from him. So we need to close his account. His closing balance is 8,000. 10,000 which was his opening balance and 2,000 which we received in check, that after deducting the remaining balance becomes 8,000. So we are closing Z's account with 8,000 rupees. Now whatever there's a difference, the amount which we did not receive moves into the bad debts account. Since Z was my debtor and this debtor turned bad, we are going to debit bad debts account. Being an expense or loss for the business, it is debited. Now if we check the entry, we'll find out that the debit balance for this journal entry and the credit balance are equal. The transaction reads, proprietor withdrew for private use rupees 2,000 from office and rupees 3,000 from bank. So this total amount is my drawings. So I'm going to debit my drawings. On April 15, I have debited my drawings with a total amount of 5,000, and from office, that's in cash, only 2,000 was withdrawn. So 2 cash 2,000, and from bank rupees 3,000 was withdrawn. So 2 bank 3,000. The next transaction received 4,800 from Z which were written off as bad debts. Now if we look at previous transactions on April 12th, due to Z a bad debts account was created for an amount of rupees 4,800. Now on April 16 it said that rupees 4,800 is finally received from Z. So when I'm receiving an amount, I'm going to debit my cash account. So I have debited my cash account. Now the bad debts account which was created for Z was debited. Now once I have received it, I need to close my account. So this account which was debited once is now credited now with the name bad debts recovered account. So my journal entry becomes on April 16th is cash account debit to bad debts recovered account for 4,800. The next transaction is salaries due to clerks for rupees 50,000. It's mentioned that salaries are due. That means these are outstanding salaries. Salaries would have been my expense, but I have not paid. This remains outstanding. So the entry will be salary account debit to outstanding salary account for 50,000. The next transaction is out of rent paid this month, 10,000 is related to the next year. So there is a payment of advance rent. Prepaid rent is an asset. So being an asset, it is debited. Prepaid rent account debit to rent account for 10,000. The transaction reads supplied goods costing rupees 6,000 to Shakuntala, issued invoice at 10% above cost, less 5% PRED discount. Before we move into the journal entry, let's just go through the workings first. So here my question says that the cost price of my goods was 6,000. This was issued at 10% above cost. So 10% on 6,000 rupees 600 is added to it. So the amount becomes 6,600. Now what's said is after this on this amount 5% trade discount is applied. So 5% trade discount on 6,600 rupees becomes rupees 330, and my total amount now becomes 6,270. So now again let's look into the transaction. It reads supplied goods to Shakuntala. So Shakuntala is my debtor. I have debited Shakuntala's account with this amount of rupees 6,270, and since this is a sales of goods, I have credited to sales account 6,270. Now let's again move into the next transaction. April 26. Goods for rupees 50,000 given away as charity. Sell price of such goods were 60,000. So I have given it in charity. These are goods. So my entry goes charity account debit, being an expense it is debited for 50,000 to purchases. Since it's not sales, so I cannot credit it to my sales. It's my goods which are moving out. So I have credited my purchases. Purchases are normally debited because purchases refers when I'm buying something. It adds value. But here it is not adding value. It is something which I'm giving it away, which shows my stocks moving out, but this is not sales. So I have credited to purchases account for an amount of rupees 50,000. Let's move into the next transaction. Goods worth 25,000 were distributed as free samples. Any distribution of free samples is an advertisement. This is an expense on advertisement. So being an expense, it is being debited. So advertisement accounts debit to purchases account. That is 25,000. I am giving away my goods as samples. So this reduces my stock. But this is not sales. Hence, I credit my purchases account. So let us move into the next transaction. Goods worth rupees 50,000 and cash 20,000 were stolen by an employee. So these were a loss for the business. So being the loss, it must be debited. So I have debited my loss by theft account by a total amount of 70,000, and I have credited what went out, that's on cash, for an amount of rupees 20,000, and stock, which was an amount of rupees 50,000. So instead of the word stock, here I am going to use the word purchases. To purchases account 50,000. The word purchases I am using here is because my stock is reducing. Let's move on to the next transaction. April 30, goods worth rupees 1 lakh were destroyed by fire. So the first part of the transaction is loss by fire. Being a loss, it's debited. So loss by fire account debit to purchases again because it's a loss of goods. So the amount of is 1 lakh. The next is insurance company admitted the claim. So when insurance company has admitted the claim, I have debited my insurance company account to loss by fire. The loss which was created is now closed as I have transferred my loss to insurance company. The amount is 1 lakh. And lastly, it said that and paid claim for 60% amount. So the insurance company which we had debited for 1 lakh did not pay us the full amount. They have paid us only the 60% amount. So now on receiving 60% of the amount, I have debited my bank account with 60,000 to profit and loss account, which the company did not accept the claim, that is for 40,000, and to insurance company account for 1 lakh. We had transferred the loss of 1 lakh to insurance company, and now we have closed their account by crediting it with 1 lakh. But actually we have received an amount of rupees 60,000. The difference which we did not receive is transferred to our profit and loss account. Being a loss, it is debited.
So, this was all about our topic, the journal entries. If you have any further queries or you want to ask something, do not forget to comment in the comment section below. Keep practicing until I see you next time with another chapter. Thank you.